Hey, good morning. This is Meir Valensky with Driving Markets, driving while talking about markets. Okay, so let's just have a quick recap where we're at with financial markets yesterday. Tesla fell, interestingly enough. It's reduced its pricing by 20% and its shares have fallen as a result, simply because there's going to be less profits available, less profits around for Tesla. So the shares have dropped to $169 a share. Now, I did say prematurely back in January that I would expect Tesla to fall to around about the 140 level. It didn't fall to that level, with the rest of the high-tech stocks also didn't fall, mainly because the outlook for rising interest rates in the US is now looking a bit more rosy, as a result of, unfortunately, the banking crisis, which knocked significantly the banks and confidence. But the Fed is unlikely to raise interest rates in the States aggressively, simply because it will send the economy into recession and create another banking crisis. So as a result of rates, so this is how it works out. As a result of rates not rising, or the prospect of rates not rising, that is good for the high-tech sector like Tesla, like Amazon, like Google, like Netflix, etc., who are dependent on cheap money because they do a hell of a lot of funding and financing in the high-tech sector. And therefore, as interest rates will be stable or come down, then they'll end up benefiting from that reduction in interest rates or the cost of borrowing. Okay, so what happened between January and now, that the stock markets have gone up simply because, the prospect of lower interest rates. All right, now that prospect of lower interest rates has impacted the high-tech sector, that they've gone up as a result. However, it's also impacted things like the US dollar, which has gone down because there's less of a prospect of interest rates rising. Therefore, the US dollar hasn't got much of a exciting horizon to look at. As a result of that, the dollar becomes less attractive because the interest rate forecast there is now unlikely to go higher, and therefore the dollar becomes less attractive, even though rates in the US are running at 4.75. Talking about interest rates, the Fed probably will increase interest rates in the main meeting by 25 basis points, but it's not going to go as aggressive in 2023 as it was in 2022, purely because they're concerned about a recession. That's simply it. Or even more than that, another banking crisis like Silicon Valley Bank or Credit Suisse or Signature Bank, etc. So there's an impact direct of interest rates. However, Tesla's shares fell not because of interest rates, it fell because of the future profitability of the company. I'm a big fan of Elon Musk, but it looks like that the trend is going down to about $140 a share, in my opinion. Again, everything said in this piece is an opinion only. Okay, so let's move on from shares, move on to foreign exchange. I've already mentioned that the dollar is sadly weaker. It was weak against the euro, weak against the pound, strong against the yen. It will continue being strong against the yen. It's well up against the yen at 134.5, simply because of the zero interest rate policy in Japan versus the higher interest rates in America, in the US, and therefore the dollar becomes attractive against the yen as a pair. Bitcoin, those of you who are crypto traders, not everyone follows this YouTube channel is a crypto trader, but it's one of those assets that is very popular. It is a bit of a gambling asset. In my opinion, it's very binary, which is either up or down. There's no fundamentals to it. However, it has taken a bashing yesterday, down $1,100. Again, that is on the back of concerns of inflation and interest rates rising. If it can't get back up and hold above the 30,000, and it's been there yesterday and it came off again, it looks like the 31,000 is a resistance level, which means that's going to float all the way back to the 25,000 level, which was the last resistance level before it broke out, but now has become the support level for those people who are Bitcoin followers. So Bitcoin is probably going to float down to 25,000 before retracing, or retrace, as they say, the technical word, retrace itself back down to 25,000, and from there it's probably going to test it. If it holds that, then it's probably going to go back up to 30,000. So very much range bound, which is great for traders if they want to trade the range, and that looks like that could be forming. Keep an eye on it. Another interesting point, which is again very, very technical, but I mention it just for the sake of knowledge, is that corporate bonds, not government bonds, corporate bond yields have gone up and the prices have gone down. Corporate bonds, as a result of the banking crisis, have become less attractive. Now remember, I will go into more detail in this probably on a live, but what happens as follows, that banks like JP Morgan and NatWest, RBS, Morgan Stanley, Goldman Sachs, they hold about 7% of corporate bonds. Okay, now because due to regulatory restrictions and due to the fact that there's a serious cash flow issue with the banks, they are taking away their available liquid resources by holding on to those bonds that are now becoming less attractive. So corporate bonds yields have gone up to pull in investors, but investors are looking more at the federal government bonds rather than corporate bonds, because the federal government bonds are, number one, safer and giving a higher yield. So corporate bonds have become less attractive. Now this is the first time this has happened since 2007, and it is a red flag. It's a red flag indicator of the bond market. If the bond market sinks, then the stock market sinks. Okay, so this is a major red flag, and it's something that needs to be paid attention to. Those of you who technically don't understand that, I will try and go into it in a live session more to explain it in a bit more detail, but it is a red flag, something to keep an eye on. That's more or less it, keeping it below 7 minutes. You can subscribe, you can comment, you can share, you can catch me on Instagram, also on TikTok, and I'd be very happy to get your feedback on this particular channel. Meir Walensky, Driving Markets, driving while talking about markets. Have a good day.